Welcome to another bar walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we are going to be going over bar area 3. This is section A3. This is a remembering and understanding topic. Identify and recall basic concepts and principles associated with proprietary fund financial statements, such as the required funds, the financial statements, and the financial statement components. And we will be going deeper into the financial statements and those specific components in future videos. So we're mainly just going to be talking about the general basic ideas behind proprietary funds in this video. And we're going to be doing that the Superfast CPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to superfastcpa.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam, and we will save you months and months of struggling with the exam. So make sure you check out the webinar. And after you watch the webinar, you're going to want to learn more. So make sure you also check out becoming a Superfast CPA Pro member. Pro members get access to the full versions of these videos. So in today's video, we are only doing 5 questions, but Superfast CPA Pro members will get access to the full 10-question version of the video when we post it in the member forum so that they can get a little bit more help and a little bit more understanding and practice. So again, if you like this, make sure you check out becoming a Superfast CPA Pro member. Now with all that said, let's dive straight into the questions. All right, here we are at question 1, and let's just dive straight in. Which of the following activities would most likely be accounted for in an enterprise fund? Okay, let's go through this. A city operates a public swimming pool that charges admission fees to cover costs. B, a city maintains a fund to account for property tax collections. C, a school district uses a fund to record federal grant revenues restricted for lunch programs. Or D, a city sets aside resources to pay principal and interest on its general obligation bonds. So if you have any idea what an enterprise fund is or what proprietary funds are, then you might know the answer to this. But if you've never really seen this before, that's okay. We are going to use these questions to learn the basic idea behind proprietary funds and enterprise funds. So if you want, go ahead and pause the video. If not, let's go ahead and take a look at the answer together. All right, here we are at the answer. A city that operates a public swimming pool that charges admission fees to cover costs. That would be something that would most likely be an enterprise fund. Let's kind of understand what enterprise funds are. By the way, they are a proprietary fund, which is what we're talking about throughout this whole video. Enterprise funds are used for activities where services are provided to the public and financed primarily through user charges, much like a business. So just think of a lot of the city-run things that kind of run like a business, like, again, a swimming pool or maybe even the buses. A lot of times those will be enterprise funds. Common examples include utilities, such as water, sewer, electricity, public transportation systems, airports, or recreational facilities such as swimming pools and golf courses. These funds track revenues and expenses in a way similar to for-profit entities, with the intent that fees from users cover costs. So again, if you are ever dealing with government accounting and you see something that seems kind of like it's running like a business, where the fees that users are paying are the thing that's mostly used to cover running the activity, then it's probably an enterprise fund, which again is a type of a proprietary fund. Options B and D are government type fund activities, and we talked a little bit about government funds in the previous videos, the general fund and the debt service fund respectively in B and D, while option C would be a special revenue fund, and again, that is also a government fund activity instead of a proprietary fund. Now, with all that, we learned a little bit about what enterprise funds are and proprietary funds, so let's go to the next question. All right, here we are at question 2, and something I always like to point out when it's an option is reading the last sentence of a question first. You know, in this situation where there's really only 2 sentences, it's not extremely helpful, but it's still a good habit to be in because frequently on exam day, you're going to see questions that have 4 or 5 sentences or even 2 paragraphs worth of information. And reading that last sentence frequently will give you the idea of what you're looking for throughout the question. So that's what we're going to do here. Which of the following describes these criteria? Let's go up to the top. Under GASB standards, an activity is required to be reported as an enterprise fund if it meets at least one of certain criteria. Okay, so which one of these options has all 3 of the criteria necessary? Let's go through it. A, the activity primarily benefits other government departments, it is funded by grants, or it accumulates resources for debt repayment. And then there's option B, the activity is financed with debt secured solely by fees and charges of the activity. Law or regulation requires that costs be recovered with fees and charges, or pricing policies are established to recover costs, and that would include capital costs. Or is it the activity is supported by general tax revenues, it involves fiduciary responsibilities, or it tracks capital project expenditures? And then option D, the activity has unrestricted revenues, relies on intergovernment transfers, or issues general obligation bonds for financing. So again, which one of these describes the criteria where at least one of these has to be met for something to be an enterprise fund? Now, if you were paying attention to what we talked about in the first question, you probably already have an idea of what the correct answer is here. But if you don't, that's okay. We are going to learn through the explanation. So let's go ahead and go to that right now. Okay, here we are. The answer is B. The activity is financed with debt secured solely by fees and charges of the activity, or law or regulation requires that costs be recovered with fees and charges, or pricing policies are established to recover costs, including capital costs. So again, right there, that's the answer. The three criteria that at least one of them has to be met for something to be considered an enterprise fund is that it's either financed with debt that is secured only by the activity's fees and charges. So there's debt that's going to be covered by the activities and fees, or the law or regulation requires that the activity costs be recovered with fees and charges, or the pricing policies are set to recover costs, including capital costs. So it all kind of comes back around to recovering costs through the user fees, but maybe for different reasons. Those are the three criteria that at least one of them has to be met for something to be an enterprise fund. Now with that, let's go to the next question. All right, here we are at question 3. How should this revenue be recognized in the enterprise fund's financial statements? Let's go up to the top. A city operates an electric utility through an enterprise fund. The utility bills customers for services provided in December, but many customers do not pay until January of the next year. So how is this going to be recognized? Is it A, it should be recognized only when the cash is received, since modified accrual basis is used? Is it deferred until the following year because enterprise funds cannot recognize receivables? Is it not recognized until both billed and collected since the availability criterion applies? Or should it be recognized in December when the service is provided since accrual basis is used? Now, we haven't really talked about this too much yet. What basis of accounting are they going to be using for the enterprise funds? And that will determine how they recognize this revenue. If you have any idea, that's great. If not, let's go ahead and take a look at the answer together. All right, here we are at the answer. D, it should be recognized in December when the service is provided since accrual basis is used. So we're learning here that as far as enterprise funds go, they use accrual basis. Proprietary funds, okay, so it turns out all proprietary funds, and that would be enterprise funds and internal service funds, use the economic resources measurement focus and the accrual basis of accounting, just like private sector businesses. Revenues are recognized when earned, and expenses are recognized when incurred, regardless of cash timing. Modified accrual, which is options A and C, that kind of covered those, applies to governmental funds, not proprietary funds. Option B is incorrect because enterprise funds record receivables and treat them like commercial entities. So they do record receivables, but again, they are going to recognize the income when it is earned and expenses when they are incurred. So we learned a little bit more about how proprietary funds work, what the basis of accounting is. Now let's go to the next question. All right, here we are at question 4. Which specific fund should the city use to account for this activity? Let's go up to the top. A city establishes a centralized technology department that provides IT support and maintains computer systems for all city departments. The department charges each other department a fee based on the services provided. So again, what specific fund are they going to use to account for this? Is it going to be a general fund, an enterprise fund, an internal service fund, or a special revenue fund? Now, based on what we've learned so far, you might have an idea. Think about this, and when you're ready, come back. We'll look at the answer together. All right, here we are. The answer is C, an internal service fund. So this is the other type of proprietary fund. We've talked a lot about enterprise funds, but now we're going to talk about a little bit about internal service funds. Internal service funds are proprietary funds used when a government provides goods or services to other departments within the same government, usually on a cost reimbursement basis. The IT services department fits this definition because it services internal government functions, not the general public. Enterprise funds are for services provided to the public. The general fund, which we talked about in a previous video, handles general government revenues and expenditures, while special revenue funds are used when revenues are restricted for specific purposes other than debt service or capital projects. And again, we talked about general fund and special revenue funds in the previous few videos. So again, the difference between an enterprise fund and an internal service fund, they are both kind of run like a business, but an internal service fund is specifically for other parts of the government, even though it is still on a cost reimbursement basis. But the enterprise fund is on a cost reimbursement basis for the public. The public is benefiting from it directly. So that's the difference between the two. Those are both the proprietary funds. Now let's go to the next question. All right, here we are at question 5. How should this purchase be reported in the proprietary fund's financial statements? Let's go up to the top. A city's water utility, which is an enterprise fund, purchases new water treatment equipment for $5 million. The equipment has an estimated useful life of 20 years. How should this purchase be reported in the proprietary fund's financial statements? So would they report the full $5 million as an expenditure in the year of purchase? Would they capitalize the equipment as an asset and record depreciation expense over 20 years? Would they not report the equipment in the proprietary fund? It is only reported in the government-wide statements. Or would they report the purchase as an expense only when the equipment is fully paid off? So how are they going to treat this? Take what we've learned about proprietary funds so far, think about this, and when you're ready, come back. We'll look at the answer together. All right, here we are. The answer is B, capitalize the equipment as an asset and record depreciation expense over 20 years. So remember, proprietary funds use normal accrual basis accounting. They use the normal economic resources measurement focus, just like a normal business would. So they account for long-term assets and liabilities. Capital assets are capitalized and depreciated over their useful lives, just like in private sector accounting. Option A reflects governmental funds, which use the modified accrual, which expenses capital outlays immediately. Option C is wrong because proprietary funds report their own assets and liabilities. They do report their own assets and liabilities, not just government-wide. Government-wide statements aren't the only ones who do that. And then option D confuses cash payment with expense recognition, which is not correct under accrual accounting. So again, we learned there that proprietary funds, just like we remembered before, use the accrual basis of accounting and the economic resources measurement focus, meaning they capitalize their assets, they do record their liabilities, and they have depreciation. Now, with all that, we learned a lot in just 5 questions. Before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up in the questions. You've seen 2 or 3 or maybe even 4 questions trying to teach you how to calculate the depreciation for a proprietary fund, or what an enterprise fund even is, or different things like that. These are the kind of things that you are noticing throughout the questions that are sticking out the most, so you take a moment and you write them out in your own words as the pillar topics based on what you learned. And as you do this each day, you are building your own personal repository of the most important things you learned from the questions in your own words so that you are ready for exam day. So with that, let's go to the pillar topics for this video. All right, here we are at the pillar topics. Let's just dive straight in. First off, enterprise funds are used for activities that provide goods or services to the public. Remember, it's to the public, and are financed primarily through user charges, such as utilities, airports, or recreation facilities. That's kind of like the general idea. Again, we did learn about the specific 3 ways that you can know something is an enterprise fund, but that's just kind of the general rule. If it's primarily through user charges, it's probably going to be an enterprise fund, like, again, utilities or airports or things like that. Internal service funds are used when the government provides goods or services to its own departments, usually on a cost reimbursement basis, such as central garages, IT services, things like that. Enterprise funds must be used if an activity is financed mainly by user fees, if law requires costs to be recovered with fees, or if pricing policies are designed to cover costs. And remember, when I'm saying financed, I'm talking about if they have debt that they are mainly going to be covering with user fees, that's one of the things that makes it an enterprise fund. So again, if it's financed mainly by user fees, or if law requires it to be recovered with fees, or if pricing policies are also designed to cover costs, any one of those would make something an enterprise fund. Now let's talk about proprietary funds in general. Proprietary funds use the economic resources measurement focus and accrual basis of accounting, recognizing revenues when earned, expenses when incurred, and reporting long-term assets and liabilities. And then finally, going along with that, capital assets in proprietary funds are capitalized and depreciated over their useful lives, unlike governmental funds. And I'm not talking about the government-wide financial statements, I'm talking about governmental funds, which record them as expenditures in the year of purchase. So there's that difference between governmental funds and proprietary funds. Again, government-wide financial statements do use the accrual basis of accounting, but governmental funds do not. They use the modified accrual. But when it comes to proprietary funds, they also use the accrual basis of accounting. So with that, we learned a lot in just 5 questions and the pillar topics, and that is the end of the YouTube version of this video. Remember, we are only doing 5 questions today, but SuperfastCPA Pro members will get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other products, make sure you check out becoming a SuperfastCPA Pro member to get access to the full videos. And the easiest way to learn about and become a SuperfastCPA Pro member is by going to SuperfastCPA.com and signing up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam, and that will give you a better path to learning about and becoming a SuperfastCPA Pro member. So check out the webinar, check out becoming a SuperfastCPA Pro member. With all that said, I hope this video was helpful. If you liked the video, make sure to like it and leave a comment, and I will see you in the next one.